This is the Asia Trade. I'm Haidi Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set to track a rebound on Wall Street as investors look beyond politics to focus on tech earnings. The Magnificent Seven leading those gains along with US-listed Chinese shares. Also ahead, Kamala Harris consolidating support from top Democrats, promising to unite the party and defeat Donald Trump in November. Plus, we hear exclusively from the CEO of EV maker Zeekr about plans to avoid EU tariffs and further its international expansion. And we are looking like a pretty solid start to trading this Tuesday, of course, putting aside some of that political risk and geopolitical risk as well to focus firmly more on earnings season, specifically these numbers coming from these high-flying tech stocks. We did see, as I mentioned, the Mag 7 really leading that rebound on Wall Street, and we'll be seeing how that tracks through, particularly after that prolonged sell-off we've had across Asian chip makers. So big focus when it comes to Japan and Korea in today's session. But take a look at how we're setting up when it comes to Sydney futures. We're up by 0.7%, looking like a return to gains for this market, which is trading at pretty peaky levels, pretty close to those record highs still that were set last week. Nikkei futures looking perhaps a little bit softer, about 0.1% softer there. Also watching FTSE A50 China futures with more sort of trickling in when it comes to the structure that we continue to see being kind of repainted when it comes to economic policy. Of course, some of the more centralized issues surrounding Chinese President Xi Jinping and his role as so-called chief economist there as well. Also still, of course, processing that surprise rate cut that we have from the PBOC yesterday. Dollar China holding pretty steady at the moment at 7.29, I should say. Take a look at how US futures are shaping up after that recovery session that we saw. And, of course, not only tech earnings that we're focusing on, but, of course, going into Friday, that gauge of PC, that's going to be the next number that kind of provides a clearer runway for how the markets are going to view where that first Fed easing is going to come through from. Fed futures looking, S&P futures, I should say, looking pretty flat at the moment. NASDAQ 100 futures, a little bit of softness there. Getting back to politics, of course, still our top story. US Vice President Kamala Harris has quickly consolidated support from powerful Democrats for her presidential bid. No other prominent party member has announced a challenge as the Trump campaign sizes up a new adversary. A balance of power co-anchor Kayleigh Lyons joins us now from Washington. So, not just the party sort of coalescing around Harris, also key donors as well. And in fact, we've seen some of the potential kind of key players really moving to support her. And I guess perhaps that field around her VP pick could actually be firming up a bit more too.
Yeah, Heidi, it's worth pointing out that no other contender for the Democratic nomination has emerged at this point. And if they don't do so soon, pretty soon, it could be seen that Kamala Harris will have the number of delegates required to actually secure the Democratic nomination, because a number of state delegations have already thrown their support behind her in the just day and a half since President Biden decided to end his reelection campaign. As you mentioned, we've also seen some key endorsements coming in, including from the likes of Speaker Emerita Nancy Pelosi. That is a big one. A number of governors who had been in contention potentially or were seen as others who might compete for the nomination have thrown their support behind her as well, now more seen as potentially vice presidential picks that could be at the ticket alongside her. But the money also matters in a massive way here. Yes, you have seen donors throwing their support behind Harris. For example, Reid Hoffman, the co-founder of LinkedIn, George Soros is behind her as well. But it's the small money donors too. The the Harris campaign, as it is now called, Team Harris, has raised $81 million in just the 24 hours since she announced that she intends to earn and win the nomination. That is a record for any 24-hour period in any presidential cycle. It dwarfs what former President Donald Trump was able to raise in the aftermath of his conviction at the very end of May. And importantly, when you look within the data that the campaign put out, 60% of the more than 880,000 donors who donated to the campaign in that 24-hour period were people who had not yet given any money in this electoral cycle. So the money would suggest that there is a lot of mobilization and excitement around Harris's candidacy.
And ahead of her debut rally, we also saw her, of course, at the campaign headquarters in Delaware. What was a tone that was being struck? And certainly there is a sense of urgency of needing to kind of hit the ground running, right?
Yeah, I mean, she made note of the fact that there's just over 100 days to go until Election Day, so things do need to happen quickly. But what was so striking about that event in Delaware was before the vice president herself spoke, Joe Biden, the president, called in as he still is recovering from COVID. The first time we have heard his voice since he made this announcement that he is not seeking a second term. And what the president had to say is that Kamala Harris should be embraced. He called her the best. He said he is not going anywhere. He will be on the campaign with her. Even though he won't be on the ticket, he said he will be fully engaged. So pretty remarkable to hear from the president after the historic and probably very personally painful decision that he had to make on Sunday. Now, what we heard from Harris herself was a number of things, including her praise for Joe Biden as the president, but she talked about her work as a prosecutor and how she knows people like Donald Trump. She also gave us a little taste of the kind of policy she's likely to focus on throughout what could be her campaign, assuming that she can clinch the nomination. She talked about tackling issues like affordable childcare and poverty, building up the middle class, and said when the middle class is strong, America is strong. So we're getting little tastes of what a candidate Harris really will look like. But of course, this really is just the first full day that we have seen her do so.
A lot more to come. A balance of power. Co-anchor Kayleigh Lyons there. Let's bring in for some analysis our next guest, who says a Democratic embrace of the Vice President has not come without concern. With us now is Jared Mondschein, who's a Director of Research for the US Study Centre at the University of Sydney. Jared, great to have you with us. So you talk about these lingering concerns. What are they?
Yeah, I think Kamala Harris has shown time and time again that she has performed well on a number of fronts. So she performed well when she was in the Senate, when she was basically cross-examining witnesses or those giving testimony or those looking for Senate confirmation, including Brett Kavanaugh. She performed well in debates, including against Joe Biden himself when she had her viral moment. Talking about her being bussed and him being friends with pro-segregationist senators. And then she also had her moment when she was launching her 2020 campaign in Oakland, California. With that said, she's also had some concerning incidents in her past, including her 2020 campaign, which started off well, had that viral moment against Joe Biden, but then was plagued by sort of disorganization, a lack of a clear policy agenda, and basically, they folded and suspended her campaign before a single vote was cast. But then also, as vice president, I think the number one concern is that similar to the way that Joe Biden was given a portfolio of issues to work on as vice president under Barack Obama, Joe Biden then as president gave her some issues to work on, and the top was immigration. And right now, you could say that immigration is basically the number one concern for a lot of Americans. In polling, we have the most important problem, and immigration continues to be one of the top one or two that Americans say is the most important problem to them. And she, by most accounts, has not done very much on the issues around the border and the record levels of migrants still coming over to this day.
And that's obviously the Achilles heel, the pressure point that the Trump candidacy and campaign is going to be going for. In that sense, though, do you think that the fact that she polled more favourably compared to Biden against Trump is sort of more an indication of the weakness that we saw for Biden's polling, particularly in the final few weeks?
That's exactly right. Yeah, I think it's important to note that as much as she is doing better than Joe Biden, and has been doing better than Joe Biden since his disastrous debate performance last month, it's not that somehow she is doing better than she was doing a month or two ago. The important thing is that the reason, in my view, that she is the heir apparent and successor is not because she has somehow changed or perceptions of her have dramatically changed. It's that perceptions of Joe Biden were just so negative after that debate performance that he really had no political or fundraising pathway forward to be a viable candidate. She has basically stayed the same. And let's not forget, for basically 3.5 years of the Biden-Harris administration, she has actually performed worse than him in approval ratings. But since that debate, she has finally eclipsed him for the first time in 3.5 years. So with that all said, though, she is far less of a known quantity than Joe Biden. So she has a lot more runway and opportunity to really define herself and to change this race.
there are a lot of people that are hoping that she'll be more progressive or more outspoken on progressive issues than Biden was perhaps comfortable talking about, particularly when it comes to women's issues. There are also a lot of people that are worried that she will be more progressive, right? On that, as you say, the perceived kind of lack of experience, how important is it for her VP pick, and which direction do you think she should go with that? Particularly, there are sort of legitimate concerns that, again, you're going to see a lot of Americans voting against, along gender and race lines too.
Yeah, I would be shocked if if she decides to choose another non-white woman as her running mate, especially one that is not from the Midwest. Ultimately, what she needs to do is something that I think the Trump campaign did not do, and that is sort of expand her electoral opportunities. In choosing J.D. Vance, the Trump campaign basically chose someone who only energized an already energized base. But in choosing someone who is perhaps from the Midwest for Harris, someone who has a history of winning the Midwestern swing states, someone who is maybe male, I think she has, Kamala Harris could really reassure those swing state voters who are concerned that she is significantly more progressive than Joe Biden, that she will be a more steady pair of hands. So if you have someone, for example, like Josh Shapiro, the Pennsylvania governor, who's a Democrat, that would show that on one hand, she is not choosing another non-white woman, and so it shows some diversity there. But two, she is choosing someone who has already carried one of the most consequential states for the electoral college in the presidential election. So if she can choose Josh Shapiro, that only increases the likelihood of them winning in November.
Jed, I'm glad you mentioned J.D. Vance, because this is a really kind of compelling dynamic for me. In so many ways, a lot of his, former views very much conflict with those of the former President Trump. At what point do you think that these tensions might sort of come to a bit of a head? Or do you think J.D. Vance will kind of continue to take the traditional VP nominee stance, which is to kind of be mostly offstage and supportive?
I think if you are VP to Donald Trump, you really only have one type of role, and that is always secondary. You do no vice president ever wants to outshine their president, or ever should if they want to keep their job. But I think especially in the Trump campaign and administration, you know your role, which is always to be quiet and behind the scenes. Now, I think the challenge with J.D. Vance moving forward is that he, as I said before, does not really help Donald Trump in the election. We're already seeing some Trump allies in the media saying that they sort of regret this choice, because if they had chosen someone like a woman, if they had chosen a non-white person, whether that woman be someone like Nikki Haley or someone like Tim Scott of South Carolina, I think Donald Trump could have expanded his electoral opportunities. But choosing J.D. Vance, I think only, as I said before, energizes the base. But also, let's not forget that when he won his Senate seat in 2022, he won that Senate seat by 2 percentage points. The rest of the Republicans in that state, whether it be the governor or the attorney general, all won their seats by double digits. So the fact that he underperformed Republicans in his own home state, I think, would have been worrying. But ultimately, the Trump campaign was so confident in their prospects for success in November that they just really wanted to double down and choose someone that they wanted for more ideological reasons than political ones.
Yeah, a real symbol of that team's assuredness of their success, right? Jared, we'll have to leave it there, but really great to have you with us, Jared Mondschein, who's the Director of Research at the US Studies Center. One of the other stories that we're following, the head of the US Secret Service is now facing new bipartisan calls to resign. Testifying in front of lawmakers, Kimberly Cheatle says she took full responsibility for the security lapses at the Pennsylvania campaign rally on July 13th, where former President Donald Trump was shot. The agency is facing congressional and independent investigations, as well as internal reviews. Coming up on the Asia Trade, we take a look at the impact of a potential Trump Mark II presidency on the AUKUS military pact, as well as on relations with Beijing. We also find out where Mercer is seeing opportunities across markets at the moment, with their global CIO joining us. More ahead. This is Bloomberg.
We are all here because we love our country, right? And we believe in our foundational principles. We believe in freedom and opportunity and justice, not for some, but for all. We are going to win.
Vice President Kamala Harris there on a Democratic victory in November. Well, stocks favoured in a Democratic administration have staged quite a rebound in the US after big sell-offs as President Biden's exit from the White House race lifts perceived odds of the party's chances of a victory in November. Let's bring Garth Reynolds, who leads our Markets Live Asia coverage. So, Garth, will you take a look at this sort of wide but narrowing spread between Trump and Harris, this idea of a Trump trade, this idea of perhaps, I guess, a Harris trade now? What are we looking at here? We seem to have lost Garfield, but continuing to take a look at that basket of stocks that are tied to a Democratic policy rebound. We are seeing that kind of fresh impetus or momentum after we saw the dropping out of President Biden from that re-election campaign. Sticking with that, and China has largely avoided officially commenting on Kamala Harris's late entry into the US presidential race, saying it is America's internal affair. But we have seen plenty of conversation on Chinese social media. They are keeping a close watch. Our China correspondent Min Lo joins us now from Hong Kong. So it's quite interesting how riveted, online users certainly in China have been by the election and kind of all of the drama that has been surrounding it.
Yeah, they're certainly watching it with great interest, and that hashtag Biden exits has garnered over 500 million views, and it seems like many people are actually in favor of Trump winning the White House. A poll on the Chinese social media website Weibo of 12,000 people has found that 80% of participants expect Trump to win the White House. And also, after Trump had survived that assassination attempt, that picture of him punching his fists in the air has went viral on social media with Chinese people, some of them commenting about how admirable he is with his fighting spirit and his love for his country. But so far, analysts are saying that regardless of whether it is Biden or Trump or Harris in power, there's not likely to be a substantial change in their China policy. It's just going to be a matter of style and personality. And certainly we have seen with President Biden, he has built upon those tariffs that Trump has introduced years ago and has taken it even further. But analysts are also saying that Harris lacks a track record on China. She doesn't have the kind of long-standing relations with global leaders like President Xi Jinping. And she has never been to Beijing. She's met President Xi during the sidelines of the APEC summit in Bangkok, and she will really need to build trust with her national security advisors to guide her China policy. And one person she can lean on would be Gavin Newsom, who has been to China last year, and that trip had garnered quite positive praise from China for the more constructive message that he sent compared to visits by other senior U.S. officials.
The US Treasury Secretary Janet Yellen will, of course, be joining the finance ministers from the G20 in Rio this week for some meetings. What's expected to be sort of top of mind there?
Yeah, well, her meeting is expected to discuss a number of urgent global issues, but it's likely to again be overshadowed by U.S. politics because with a potential Trump win, there is growing concern among global leaders that are questioning how committed the U.S. would continue to be in these multilateral institutions like the G20. Yellen is expected to restate Biden's commitment to aid Ukraine in its war against Russia, but that's a policy that could see a drastic change in direction if Trump were to win power in November. But one policy that will not change, though, is China, and Yellen is expected to again highlight the risk of China's overcapacity problem and how China could dump cheap goods on the global market. She's likely to highlight again how China is over-relying on exports and massive subsidies for its manufacturing industries. And she is also likely to urge emerging country leaders to voice concerns over China. So far, we have seen countries like Brazil and India taking action to protect their own industries, but most emerging country leaders have not attacked China to avoid any sort of political retaliation. And analysts are saying that a win for Yellen Biden would look like more emerging country nations coming out to voice their concerns against China.
Our China correspondent Min Lo there with the latest. And as we were talking about earlier, this basket of stocks that are seen to kind of do well in the case of a Democratic victory in November, staging that rebound in the overnight session. We had that, of course, really the exit of President Biden lifting these perceived odds of potentially a victory in November. Let's bring in now Garth Reynolds, who leads our Markets Live Asia coverage. So, Garth, we talk a lot about the Trump trade. We're now talking about, I guess, the Harris trade. What are we dealing with here?
Well, Heidi, yeah, I think those Harris alliance stocks, I mean, to some extent, they're also kind of Biden alliance stocks. So one of the things that investors were looking at when things were looking so overwhelmingly positive for Trump's campaign, and let's face it, they still look very positive, just not as positive, was just which stocks would do better under Trump, which stocks would do worse under him. So it's logical that you would see some rebound in equities that was seen as being on the wrong side of the way the election was tracking, and especially often easy to overlook this from outside the US, but within the US, there's a lot more sensitivity about what goes on with the race for the House and for the Senate. And one of the expectations that had been growing as the Trump campaign was gathering so much momentum was the potential for a Republican sweep, that they would get the presidency, the Senate, and the House, and in particular they could get like a strong holding. Because as history has shown, you can win the House, but if you don't win it by much, that may not allow you to pursue your agenda in the way you might otherwise wish. So that's all playing into it. I think also, honestly, there's just a sense of relief from investors that they can now put politics aside potentially until closer to the election, when, by the way, the opinion polls will actually provide a clearer picture about what's going on. A lot of times opinion polls don't really give you a good guide until after the conventions. That's when some data shows that people actually start paying serious attention to who they will actually vote for, rather than just who they will say they will vote for if they happen to be asked by somebody by phone or by email.
It's interesting, this, and we talk about it on the MLive blog, about this kind of refocus on concrete narratives. And I suppose one of those narratives would be the trajectory of earnings, another would be where the Fed goes. And, we talked about PCE yesterday as well, as we get towards Friday as well. There's also a view that, even with Trump's kind of jawboning, some strategists still see a stronger, ultimately, US dollar.
Well, that could well be the case. One of the difficulties with trying to work out what Trump trades make sense is that there are lots of contradictions, surrounding what Trump wants to achieve. He talks about wanting a weaker dollar and about using the threat of tariffs to get that weaker dollar. The problem is that tariffs themselves tend to strengthen the dollar, and that's what those people are focusing on, the idea that if Trump brings in tariffs against China and against others, that will ultimately strengthen the US dollar.
Garth Reynolds, who leads our Markets Live Asia coverage. Interesting times indeed in these markets. We do have more ahead on the Asia trade as we count down towards the start of trading across major markets here in Asia. This is the Asia trade, about 30 minutes away from the major market opens. These are the top stories that we're watching this hour. US Vice President Kamala Harris is consolidating support from powerful Democrats for her presidential bid. She appears to have a clear path to the nomination, with no prominent party figure announcing a challenge. The renamed Harris for President campaign added $81 million in donations in the first 24 hours. Asian stocks are set to track a rebound on Wall Street as investors look beyond Joe Biden ending his re-election campaign to focus on the tech earnings season. Bank of Japan officials are said to be seeing weakness in consumer spending, complicating their decision next week over whether to raise interest rates. Our sources say policymakers are likely to wait until the last minute to finalise their decision after checking the latest data. Let's get some more on this with our Asia Economy and Government Senior Editor Brian Fowler joining us from Tokyo. And, this issue of sort of domestic sluggishness, even with some of the evidence that we'll see with wage hikes and consumption, could we see that delaying that long-awaited another rate hike next week?
Well, Heidi, I guess the one thing I can say definitively is we are going to see a really lively discussion next week. On the consumption side, we've seen some kind of bad news lately. In May, you'll recall that household spending fell unexpectedly. Economists had thought that it might blip up a little bit. And then we saw real wages fall more than expectedly that same month. So that doesn't really bode well for that virtuous cycle story, the concept of wage gains feeding into higher spending, which then kindles demand-led inflation. At the same time, national CPI in June picked up for a second month and stayed above the BOJ's target for a 27th month. So the bottom line is the BOJ could, in theory, go ahead and hike interest rates and then say that settings remain relatively easy. But the majority of economists expect the BOJ to hold next week.
And there's also the issue of the yen, right, which has mostly kind of benefited from a meandering dollar and some weakness in the greenback there. Could that be a risk, though, when it comes to the BOJ deciding not to hike and that sparking another round of yen weakness?
Yeah, I think that's definitely a key thing to look at. It's definitely a big risk. If the BOJ doesn't hike, that might put some downward pressure on the yen. On the other hand, we've seen some data out of the U.S. Really, for the first time in a while over the last few weeks, we've seen data showing that inflation is slowing and that the growth is slowing. And we have, in the coming days, we have GDP data Thursday, we have the PCE deflator on Friday, and both of those data sets are expected to support the narrative that things are slowing down and that the Fed could cut interest rates as early as September. So if that proves to be the case, that would take a lot of pressure off the BOJ to hike this time around.
And you mentioned sort of the key data points, right? Given that every release seemingly matters at this point, what's sort of the most key in the pipeline ahead of that end of July meeting?
Yeah, so the big figure to watch is the Tokyo CPI data that are due this Friday. The gauge, excluding fresh food, is expected to rise just a little bit, and that would be a greenish signal for the BOJ if it wants to go ahead and say that. Not a hugely green signal, but at least slightly greenish. So that would be a signal that it could hike if it wants to. Then we'll also get on the day of the decision, the 31st, we'll get some retail sales data. Those figures can be a little bit volatile, but they're expected to show at least a fairly strong underlying trend for spending, partly supported by outlays by tourists.
Our Asia Economy and Government Senior Editor Brian Fowler there in Tokyo. We're going to stay with Japan. We are seeing a little bit of a perking up when it comes to Nikkei futures trading at the moment. We did see Japanese stocks hitting a 3-week low on Monday. Bloomberg Intelligence suggesting that Japanese equities facing a moment of truth with second quarter results now in focus. Let's bring in our Asia equities reporter Winnie Su in Tokyo. So there's been sort of a lot of soul searching as to what this next part of this equity cycle after such strong gains in the first part, what we'll continue to see. What do earnings potentially have in store?
Right, so just for today, we're likely to see the Japanese stocks following that overnight rebound in U.S. stocks. However, like you mentioned, investors are turning their attention to earnings, and that's going to be, we're going to have NIDEC kicking off that earnings season from today. Right now, expectations for earnings has been quite positive because people are expecting the weakness in the yen for the April to June quarter to still be a tailwind for Japanese stocks. But outside of that, investors are also looking at, for example, how the U.S. election can potentially impact Japanese stocks. Right now, we're seeing some volatility, but overall, the Trump trade is still relatively positive for Japan stocks. So we're going to see if that sentiment continues. And also, the yen is something that investors are still looking at right now. While we've seen some strength in the yen recently, overall, it's still quite weak.
Yeah, is that sort of impact of the currency starting to fade when it comes to the direction of where this market goes from here?
Right. So recently we're seeing, because the yen has dropped to a level that is basically a historical weakness, that it actually shows. We're seeing some reversal in trends in terms of how the Japanese stocks usually rise along with the weakness of the yen. So that relationship starts to unwind a little bit. However, overall, investors are still saying that the weakness of the yen in general would still be beneficial for Japanese stocks. One thing to look at is one thing that we want to focus on is how the Bank of Japan might make a decision next week. And just now we heard that we're seeing some concerns around the weakness in consumption levels. So that might actually weigh on how which direction that the Bank of Japan would take. And the outlook of the rate hike would then also affect some of the specific stocks in the Japanese market. So with the potential strength of the yen, that could be beneficial for some of the financial stocks, but still weigh on exporters.
Our Asia equities reporter Winnie Su there. Let's take a look at how we're setting up. And as I mentioned, perhaps a little bit more positivity coming through from Nikkei futures trading at the moment, as we're just about 20 minutes away from the start of cash trading across Asia. But of course, we did have, quite some lows when it comes to trading in Japan. The Topix, its lowest level since the 1st of July. We also had the Nikkei giving up almost 15% of that gain from that April 19th low for this financial year through to that peak on July 11. So potentially a little bit more soul searching to go for Japanese equities. Also watching Korea as well. Some of those laggards there, particularly when it comes to chips and autos. That fourth day of declines for the Kospi. Could we see that reversal in the day session as well? This deeper kind of tech route is in question as we get into tech earnings as well. Certainly there are some investors, including the likes of Morgan Stanley's Jonathan Garner, suggesting that it's time to sort of take profits right with that Asia leadership changing across these sectors, typically occurring before a move from the Fed. And we'll know, of course, a lot more about that latter component as we get those PCE numbers in the Friday US session. More ahead on the Asia trade. This is Bloomberg.
The name has changed at the top of the ticket, but the mission hasn't changed at all. And by the way, I'm not going anywhere. I'm going to be out there in the campaign with her, with Kamala. I'm going to be working like hell, both as a sitting president, getting legislation passed, as well as in campaigning.
President Biden's first public comment since exiting the race for the White House. Well, Biden's top diplomatic and defense officials are proceeding as planned with a trip to Japan and the Philippines this week. The visits by the Secretary of State, Antony Blinken, Defense Secretary Lloyd Austin as well, are part of a long-term effort to reinforce US commitments in the face of a more assertive Chinese stance around disputed waterways. Upon returning to Washington, both officials will be meeting with their Australian counterparts. Well, on the topic of Washington's ties with Canberra, the AUKUS partnership to share submarine and arms technology was meant to establish a generation-defining alliance aimed at hemming in China. But some critics are arguing that it's made little progress and faces an uncertain future under a potential Trump presidency. Let's get some analysis with Jennifer Parker, who's the expert associate at the Australian National University National Security College. Jennifer, great to have you with us. So, first of all, talk us through some of the ongoing criticism over this structure and the perceived lack of progress.
Yeah, look, thanks for having me on, Heidi. It's great to chat about Australia-US defence relations. Look, in terms of AUKUS, just a couple of points. So it's not an alliance, and I think that one of the criticisms comes from people who misinterpret what it is. It really is a capability pact between the UK, the US and Australia about transferring exquisite capability, so in the case of Pillar 1, nuclear-powered submarines, to Australia. Now, I wouldn't say it's about hemming in China. I would say it's about bolstering integrated deterrence in the region, of which Australia is a key part. Now, of course, there have been criticisms in all countries From the US, there's a real conversation about whether the US has this submarine industrial base that can support the transfer of 3 Virginia-class submarines to Australia in the 2030s, which is considered phase 2. In Australia, there is significant concern about the cost and the fact that Australia doesn't have a nuclear-powered civil industry, let alone operate nuclear-powered submarines. And of course, in the UK, there are concerns about the submarine industrial base. There are lots of criticisms, but I guess, given that we are a couple of years on from the announcement, we are nearly 18 months on from the announcement of the optimal pathway, which is how the US, the UK and Australia intend to work together for Australia to get nuclear-powered submarines, it's actually fairly on track. Now, that doesn't mean it will always stay on track. It's a capability pack that goes over, 20 to 30 years. But right now we're seeing Australia has already injected nearly $5 billion US into the US submarine industrial base. Australia has injected nearly the same into the UK submarine industrial base. There is a lot of work going on in Australia to support the infrastructure for Submarine Rotation Force West, which is phase 1, where US and UK submarines will work through Western Australia. There is a lot of work going on in Australia to get the regulatory agreements in place to transfer nuclear-powered submarines. And we saw in the US in late 2023 the approval go through Congress for 3 submarines to be transferred to Australia in the 30s. Now, there was a caveat for that, which is when it comes to actually making the final decision, it needs to be approved by the president at the time. But I think all of those things are in place. We're currently on track.
On track, but are we still increasingly, as an alliance, outmatched by the naval build-up that we've seen out of Beijing?
Look, that's absolutely true. So China has been rapidly building naval ships. There's all sorts of numbers out there. Some people say it's about 380 surface ships growing to 440 by 2026 or something like that. I'm not sure the numbers are accurate, but the fact is the shipbuilding industrial base in China is significant, and they are pumping out and building a large navy. And as much as there's questions about quantity versus quality, we do know that the number of ships, the quantity, does have a strength all in its own. And of course, their conventional navy supported by their Chinese Coast Guard, which we're seeing operating in the West Philippine Sea. A lot of the stoushes you see between the Philippines and China are actually their Coast Guard and also their maritime militia. So it is true that they have a significant capability. But I'm not sure when you weigh up the ability to deter China from taking action that is adverse to the national interests of countries like Australia and the US, that it is a 1-for-1 ratio in terms of ships.
Do you think that threat is sufficient to turn AUKUS, from an agreement that was made under President Biden to one that can be sustained into the next presidency, particularly if it is under a second term for President Trump?
So I do. So if you look at polling in all 3 of the countries that's been undertaken, most of the polling indicates that the countries are broadly supportive of the AUKUS agreement. And let's not forget, yes, it is about deterring China's increasingly aggressive actions in the Indo-Pacific, but it also is a capability pack that actually helps the industrial bases of each of the 3 countries. So I think there's enough in it. I mentioned before the injections that Australia has placed into the submarine industrial bases of the US and the UK. They've also opened up operations out of their bases in Western Australia and provided significant force posture, so the ability for the US and the UK to forward base assets through Australia. So there are lots of benefits to it. And I think, too, when you think about the potential change in the now definite change in the presidency in the US come January next year, I think no matter who is president, it's very clear that this is a very good deal for the US, as it is for Australia and as it is for the UK. So there's probably no reason to expect it to significantly change unless there was some sort of catastrophic failing in the pathway, something went terribly wrong. And let's remember, too, the Authorization Act that went through the US Congress in December 2023, it's actually not the next US president that makes the decision on the transfer of submarines to Australia. It is the president after that. So I don't think there's anything at the moment to be concerned about. It is, of course, a risky endeavour, but all great capability projects between countries when it comes to defence are risky endeavours.
the political, domestic political component is also an unknown, right? There's sort of significant criticism internally within Australia. Do you think that will have an impact, particularly when it comes to transforming, the ability of this country to be able to push this through when it doesn't have a domestic nuclear industry?
Look, I actually think that the idea of some sort of domestic disagreement on AUKUS is overplayed. So we do have bipartisan support from both of the major parties in Australia for AUKUS. And in fact, if you remember, the previous government, it was actually the Liberal government that actually agreed the AUKUS deal, and the Labor government agreed to take it on. And one of the conditions that's come out from the US for the AUKUS deal to take place is that it had bipartisan support in Australia. So I do think it has bipartisan support. It is a separate discussion to the discussion around the civil nuclear industry, and it needs to be kept separate. The reactors that Australia is talking about getting that will be designed in the UK by Rolls-Royce are self-contained reactors. Australia does not require a civil nuclear industry to operate that capability. So we need to keep them as separate discussions. But when we talk about AUKUS as a whole and support in Australia for it, there is bipartisan support. And actually recent polling from both the United States Studies Centre based in Sydney and also Lowy based in Sydney, there's a majority of Australians actually support AUKUS. Now, that won't always be the case. There is a conversation around social licence, and I think the government needs to work hard to keep highlighting to Australia why it's important in keeping it on track. But right now, I think that the critics are pulling at straws to say that there isn't bipartisan support for this in Australia.
Jennifer, really great to have you with us. Jennifer Parker, who's the expert associate at National Security College. More ahead on the Asia trade. This is Bloomberg. Geely's premium EV brand Zeekr is considering using European production to avoid EU tariffs. The CEO, Andy An, told us exclusively about the brand's global growth ambitions, including the launch of a new offering in Hong Kong.
Zeekr is a global brand and a luxury high-end brand. As to why we had our launch in Hong Kong, everyone knows Hong Kong is a leader in the use of multi-purpose vehicles and the birthplace of luxury MPVs. This release is very meaningful as this is a global launch, targeting global markets for simultaneous sale. This is a very important turning point for our global strategy and planning.
Let's talk about international markets because we are seeing a wall of tariffs from the US, EU, possibly Canada, and Turkey as well has just announced 40% tariffs on Chinese EVs. So how big of a blow are these tariffs on your overseas expansion plans?
Of course, regarding the introductions of these policies, I personally express my regret. I think these decisions are not right. For us, we very much follow international free trade. I should say for Zeekr's international development, there will be a certain impact. As for how to face this impact, I think we can plan for the short, medium to long term as a whole. First, I think we need to work hard to improve our brand image, boost our technological competitiveness, our high-quality products, and a good service experience for users. Second, we should consider localized production in each area. For example, in Europe, Geely has been making cars for 30 years and has been proactive in building the foundation for internationalization. So in the future, we won't rule out using the resources of our holding group's partners to compete in the market. We are now proactively pushing for localization work in Europe.
Let's talk about the mainland China market because now there is a very brutal price war going on. And I believe you've been operating on a net loss. Last year, it was a loss of over 1 billion yuan on a revenue of over 7 billion yuan. So how long can you survive this price war? And how long do you think it will last?
Indeed, right now China's EV market is very competitive. The price war competition is relatively intense. I feel we cannot just rely on price wars to win an edge in the market. An enterprise, it relies on its brand, its sales, its good financial performance, and good products to win competitiveness in the market. I also believe, as our sales increase in China and outside of China, and the brand further improves, I believe our financial performance will be better. Our target this year is to work hard to achieve profitability or break even for the full year by Hong Kong accounting standards.
I want to talk about your IPO in May because you had a very strong IPO in the US, but since then we have seen your share price on the decline and it's now trading below the IPO price. What is your outlook and why should investors keep buying your stock?
There have been some fluctuations in the stock price in the 2 months or so since the IPO. I'm filled with confidence about Zeekr's future development. We're more focused on future good sales performance and improvement in our brand to bring good financial results. And through this hard work, I believe the market and investors will give Zeekr a fair and reasonable valuation.
Zeekr CEO Andy An there speaking exclusively with our China correspondent Min Lo. Well, we are just, about 4.5 minutes away from the start of cash trading in Sydney, Seoul and Tokyo. This is a picture looking more or less optimistic there, looking like Asian equities are going to follow that rebound on Wall Street. Investors now kind of looking for more concrete narratives beyond the end of the Biden re-election campaign and the start of the Harris election campaign, I should say. Really more firm focus when it comes to data as well as tech earnings season as well. We're looking at some gains across Australia and Japan. A little bit of weakness there for US futures. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. And of course, we see this kind of refocusing for investors that has been so distracted by US political developments over the past few days and past few weeks, in fact. But now, of course, earnings season, tech earnings, financials as well, and that drumbeat to the PCE numbers, which hopefully gives us a better kind of runway as to what that looks like for the Fed.
Yeah, that's right. A couple of big central rate decisions coming up. The Fed, of course, the Bank of Japan as well. So, yeah, the market, turning its gaze from domestic US politics back to real fundamentals again. Yeah,
we are still watching domestic US politics, though, and we'll get you the latest in just a moment. But let's get you straight to the start of trading in Tokyo. We're seeing a little bit of signs of sort of a rebound as this kind of, head-scratching phase, I would say, when it comes to Japanese equities after the recent volatility that we've seen. What sort of holds in store for this next phase? Do we see further gains? Do we see a little bit more of kind of that reassessment with the stability that we've seen recently in the yen and the potential that perhaps the BOJ will be held back from the next rate hike going into the end of the month by the weakness that it sees in domestic consumption? Regardless of all that, at the moment, Tuesday morning, looking like we're seeing gains of about 0.7% when it comes to the Nikkei 225. We see the topics seeing some pretty good gains as well. In particular, we're watching some of those chip names, given that pretty prolonged sell-off that we've seen across the AI and chip-related names in Japan, in Korea, as well as in Taiwan markets as well, on the back of some of the losses we've seen in the US. But of course, that kind of resurgence of the Magnificent Seven really setting up tech stocks in Asia pretty well there. Dollar yen holding pretty steady, 156.89. The question is whether, if the BOJ holds into next week's meeting, whether that's going to kind of put at risk the recent momentum that we've seen in the strength in the yen and the weakness, of course, conversely in the dollar there, Paul. We're also watching, of course, as I mentioned, some of these tech stocks trading in Korea at the moment. Take a look at where we're seeing particularly the KOSDAQ trading in the first sort of minute or so of trade. They're up by just about 1%. So a little bit of a recovery mode, if you will, after those recent losses.
Yeah, here in Australia, we've also just opened for trade. Very modest risk-on sentiment here at the moment. Of course, we do have that staggered open. One stock we're going to be watching is Woodside, starting with a W. We might have to wait a while, but it's just acquired a US LNG developer, Tellurian, for $900 million. Woodside looking to expand supply, boost exports. We'll have production numbers out of Woodside a bit later on today as well. Take a look at the Treasury space as well. Some interesting movement there over the past 24 hours. During the US and Asia session, we did see some of those popular Trump trades unwinding a little. The curve steepened, and then that re-steepened again during the US session. Right now, we've got the 10-year, just the yield dropping just a little, 424.86 there. We've got the Aussie dollar softening a little bit as well, 66.40 against the greenback. Right, let's bring in our next guest, who's worried that a contentious US presidential campaign may see the Fed staying on hold until after the election. With us now is Hooman Kaveh, Global CIO at Mercer. And Hooman, we can now turn our focus perhaps to that Fed meeting next week. Do you think we're going to see some easing before the election, or would the Fed perhaps prefer to just take it out of the political scene altogether and avoid the risk of becoming embroiled in an ugly debate?
Good morning, Paul. A very important question. And I think our central scenario are 2 rate cuts between now and the year end. Having said that, as we've seen the political race hotting up, and obviously with President Biden deciding to not seek re-election, I think that the Fed will want to try and minimize any interference in what is going to be obviously a contentious run into the election. So it's a possibility, particularly if everything is trending well. So economic growth is good, it's solid. Employment, is fine, trailing a little bit off. Inflation is behaving itself. You would be tempted, if you're a Fed governor, to just say, let's stay as we are, stay on hold until after the presidential election. But of course, economic factors can change, and there is potential then, therefore, for need for action. But I would say, as long as things look okay, which they seem to do, it's not putting Fed's current policies, not putting undue pressure on any particular domestic or international factors, then I think they're probably comfortable to sit tight, would be our best guess.
Mm-hmm. Well, Mercer's, of course, having a big global meeting in just a couple of days. How much of the discussion do you think is going to focus around US political risk, who's in power in 2025, or, as you just described, are there bigger catalysts to talk about?
Indeed. Yes, we are gathering here in Melbourne for our annual Global Investment Forum, the Pacific Global Investment Forum, where we'll have asset owners, clients of Mercer's, together with asset managers, partners who provide solutions and strategies for those clients under our oversight and advice. And we will be talking about both politics and economics, as we often do. And certainly throughout this year, we had the first of those Global Investment Forums in Dublin and the second in Nashville. And both of those politics, and particularly the presidential election, was top of mind. Of course, at that point, it was the race between, if you like, President Biden and Donald Trump, and the Trump trade that you've been talking about. And now we've seen this, change of course, which is taking pause. I think at one point people were pretty convinced that Donald Trump would become the next president, and so we saw the so-called Trump trades playing out, and people have been discussing potential for a weaker dollar, so that's helped, for example, the yen that you were just talking about stabilize. We've seen some strengthening in European currencies, emerging currencies, but that's just unwinding a little bit. Of course, in the polls, clearly still Mr. Trump is significantly in the lead, and so you would still continue to expect that he potentially wins and those so-called Trump trades come to pass. But having said that, we all know the last 100 days, as we are approximately away from the elections, can mean a lot of back and forth. So it'll be interesting to see how the markets react to that.
Well, the reaction tends to be pretty short-lived, right? And whether that's sort of to the peril of investors, but a lot of refocusing happening when it comes to earnings as well as the tech trade. We saw that big sell-off in chips. Do you think now is a time for a rotation sector-wise right before we get a potential first easing move from the Fed?
It's a very good point, Heidi. I think what we've seen clearly is that momentum in the Magnificent Seven, the very large cap tech trade for quite a long time now. And, you know, to us, the valuations are pretty full. It's drawing a very, very optimistic picture over the next few years, and we're all very strong believers in AI, but it does really look to be fully valued from an investment return perspective. And so I think that what we've seen over the last few weeks, that initial signs of a widening to the other, as people say, 493 stocks in the S&P 500, and you know, earnings continues to be pretty good. And so our expectation is that we will see that widening of the market leadership, and that we do think that other sectors and other stocks should benefit from that. So we would always advocate diversification anyway with clients' portfolios, and look to have different strategies in portfolios to make sure that we have good hedges in place. But I do think that we probably will see, as interest rates continue their downward trend, we'll see a broadening of the leadership in the equity market.
I wanted to get some more on your views in terms of what sort of lies in store in the next leg, I guess, for the Japanese equity cycle. You talk about better returns if the yen continues to hold on to strength, but arguably one of the appeals of Japanese equities have been, you know, how cheap they've been as a result of that currency weakness.
No, you're absolutely right. I think the first leg, the leg that we've seen in the recent while with Japanese equities powering ahead over the last couple of years, has been a large part associated with the weakening yen. I think exporters are in great shape. They are competing. As you've reported, the yen has been the weakest it has been for a very, very long time, and that is benefiting exporters. I think as the economy continues to gather strength and is moving to a higher nominal growth environment, where we might see wage growth coming through, more spending, consumption locally, then we'll hopefully see that broadening and therefore a stabilization in the first instance, and even a potentially strengthening yen if the dollar were to weaken. I don't think would unduly hurt the exporters, and at the same time would broaden the appeal of Japanese equities, particularly, let's say, the financials, which would benefit from higher interest rates, would benefit from more domestic consumption. So we think that if the yen stabilizes and perhaps strengthens from here, that would benefit the market further.
Hooman, really great to have you with us. Hooman Kaveh, who's a global CIO at Mercer. Much more ahead on the Asia trade. This is Bloomberg.
We are all here because we love our country, right? And we believe in our foundational principles. We believe in freedom and opportunity and justice, not for some, but for all. We are going to win.
US Vice President Kamala Harris speaking as she consolidates support from powerful Democrats for her presidential bid. No other prominent party member has announced a challenge. Bloomberg Balance of Power co-anchor Kayleigh Lyons joins us now from Washington. Kayleigh, after weeks of apparent disarray, it now appears we're in the opposite scenario. Tell us about the donors, the political support that's gathering for Kamala Harris.
Well, it has come together with incredible force, Paul. Of course, it's just been less than 36 hours since Joe Biden announced he's not seeking re-election and endorsed Kamala Harris. And the number of endorsements that have followed in quick succession have been quite incredible. Nearly all of Democratic leadership at this point has endorsed her. There's two key holdouts still, the House Democratic leader Hakeem Jeffries and Senate Majority Leader Chuck Schumer, who said they will be meeting with Harris first before they make an announcement together. It is widely expected that they ultimately will endorse Harris, too, as former Speaker Emerita Nancy Pelosi did today, in addition to a number of Democratic governors who had been thought to be some that could toss their hat into the ring and compete for the Democratic nomination. Instead, they have decided to support Kamala Harris. So that is a big part of that, the idea that the political class is coming together for her. The other big part, as you alluded to, is the donors and the money. A number of big-name donors like Reid Hoffman and George Soros have expressed support for Harris. Hollywood is getting behind her as well. But the small money donors are incredible to see as well. Team Harris, the campaign, says in the first 24 hours, it raised $81 million. That is a record for any presidential election cycle, one-day period in history. And they note that within that, of the more than 880,000 donors, more than half of them, 60%, were donating for the first time of this cycle. So that does suggest that she is inspiring some enthusiasm in voters who were previously unengaged with the campaign, perhaps because they were unhappy with the choices of Donald Trump and Joe Biden, are starting to get a little more enthused.
Yeah, really interesting, particularly to see that the ability of black women fundraising that's happened in a very short period of time for the new candidate. We did also hear from President Biden. Obviously, it's been a pretty difficult few days and weeks for him, but he's come out obviously in full support for this election campaign.
Yeah, he endorsed her first in a statement, and then Joe Biden called into that meeting of the campaign headquarters that Kamala Harris was attending in Wilmington, Delaware, basically saying that he is fully behind her, that he may not be on the ticket, but he still will be actively engaged in the campaign and will be campaigning with Harris. So basically signaling that he is going to be helping her out in whatever way that he can. It is worth noting that Harris is campaigning as of today, not just visiting Delaware, but we just had confirmation that she'll be traveling to Milwaukee, Wisconsin tomorrow for a campaign event. Milwaukee, of course, where the Republican National Convention was just held. So she is already very much on the trail. But of course, it comes at a time in which she is also trying to be respectful of President Biden and his legacy. She began her remarks in Delaware today talking about how much she loves Joe Biden. And while we did hear the voice of the president today for the first time since his announcement, we are still expecting that he will address the nation in a more formal way in the coming days, as he's still recovering from COVID-19 at this time.
That debut rally for Kamala Harris as presidential candidate on Tuesday in that battlefield of Wisconsin. We'll be looking ahead to that. Kayleigh Lyons is a Balance of Power co-anchor there with the latest. And interestingly, China has avoided officially commenting on Kamala Harris's late entry into the US presidential race, saying it is America's internal affair. But certainly Chinese social media users are keeping a very close watch. China correspondent Min Lo joins us now from Hong Kong. And, you know, overseas elections are always a source of fascination for netizens in China, as you would call them. What are we hearing in terms of the changes over the last few days?
Yeah, certainly the Chinese people are watching it very closely, because obviously who wins the election will have some impact on US-China relations. And on social media, that hashtag Biden exits has garnered over 500 million views. And it seems like many social media users are in favor of a Trump win and not as many vote of confidence for Kamala Harris. But it could also be her lack of exposure in China as well. And suddenly after that attempted assassination over the weekend and that image of Trump pumping his fist into the air, that had went viral in China, with many people commenting about how much courage he showed in a time of national vulnerability. And a poll on Chinese social media site Weibo of 12,000 people has found that 8 in 10 participants think that Trump will win the White House. And so far, experts have pointed out that Harris does not have a track record in China. She has not visited Beijing. She doesn't have the sort of long-standing relationships with global leaders like President Xi Jinping. She has met President Xi on the sidelines of the APEC summit in Bangkok, but she will really need to start building up trust with her national security advisors to guide her China policy going forward.
And Beijing President Xi is said to be cementing his role as a chief economist and shrinking the space for debate around that. What's the implication of this?
Yeah, this is a report that has been done by our Bloomberg newsroom colleagues based on conversations with economists and experts in and out of China. And what we've found is that in the first decade of President Xi's time in power, there has been many of these informal exchanges between Chinese policymakers and foreign analysts and economists that provided a way for alternative views to be heard by the Chinese leadership. But so far now, we're seeing that these meetings are becoming less regular, and they are yielding less sort of meaningful discussions that we've seen in the past. One example is the former PBOC governor. He used to hold these meetings one every few quarters, but now Chinese economists are telling us that they're not sure that their proposals are actually being heeded by the government. And one even said that comments by prominent analysts are sometimes being seen as noise that is distracting to presidency's top-down messaging. And so the risk of this is if Chinese economists and analysts are not feeling safe to voice out their opinions, then the Chinese leadership could be increasingly in an echo chamber and making policies that may not necessarily reflect the needs on the ground. And we've seen how when presidency cemented his unprecedented third term in power, he had put together a team of loyalists and displaced a generation of trained economists, including the former Premier Li Keqiang and former Vice Premier Liu He as well. And the new Premier Li Qiang, we have seen how he had also ended that 30-year tradition of holding an annual press conference every March. And that also reduced the sort of face time that foreign journalists get with Chinese policymakers as well. So analysts are saying that investors now have increasingly less access to information to glean about the Chinese economy. And this also dovetails with that decreasing openness with the U.S. amid this growing tension with China's biggest strategic rival.
All right, Bloomberg's China correspondent Min Lo there. Well, Bank of Japan officials are said to be seeing a weakness in consumer spending, complicating their decision next week over whether to raise rates. Our Asia economy and government senior editor Brian Fowler joins us now from Tokyo. So, Brian, next week, are we going to see a policy move or not?
Well, the one thing I can definitely say is we're going to see a really lively discussion one way or the other. On the consumption side, we've seen some bad news over the last month or so on that front. We saw household spending in May unexpectedly fall. We also saw real wages for the same month decline more than expected. So that kind of calls into question the whole concept of the virtuous cycle that the BOJ has been touting, where we see wage hikes feeding into more spending, which in turn kindles demand-led inflation. On the other hand, national CPI for the month of June picked up for the second straight month, and it stayed above the BOJ's target for a 27th straight month. So you can say that inflation certainly seems to be sustained at this point. And I guess the bottom line would be that there's a case the BOJ could go ahead and hike rates and maintain that settings still remain relatively easy. But for now, the majority of economists we've talked to think that BOJ is going to stand pat on policy next week.
We've seen kind of this relative moment of strength for the yen, right? Could that be short-lived if the BOJ holds?
Yeah, so currencies, that's a big wild card here. So one of the things that we've seen over the last week is political pressure within Japan. We saw Taro Kono last week. He's a big LDP heavyweight. And then we saw the LDP Secretary General Motegi this morning, both advocating for a BOJ rate hike in order to support the yen and put a cap on inflation. Now, how that kind of pressure feeds into the whole debate remains to be seen. The BOJ, of course, is not only independent, but it also has to maintain the appearance of being independent. So, you know, that kind of pressure could actually work against a decision to hike. Also, we have the U.S. recently data coming out of the states showing that output and inflation is cooling a bit. And in the coming week, we'll have GDP on Thursday and we'll have the PCE deflator on Friday. And both of those data sets are expected to be consistent with that narrative. If that's so, it ups the case for the Fed to cut rates in September and probably takes a lot of pressure off the BOJ to hike next week.
So we've still got a bit of data to come before that decision. What are the big points that we're watching?
So in Japan, the big data point to watch will be this Friday when we have the Tokyo CPI for July. The core figure that excludes fresh foods is expected to pick up just a tad. That, if the BOJ wants to make the case for it, the BOJ could say, okay, CPI is picking up. That gives us the go-ahead to go ahead and hike. We'll also have retail sales data due on the actual day of the decision. Those numbers are notoriously volatile, but they've been fairly robust of late. And part of that is support coming from spending by tourists. But those data will also feed into the whole consumer demand narrative and could be a factor to watch also next week.
Our Asia Economy and Government Senior Editor Brian Fowler there in Tokyo, of course, very closely watching that Bank of Japan decision next week. More ahead on the Asia trade. This is Bloomberg. The latest on the corporate front, and Kakao founder Brian Kim has been arrested over allegations of market manipulation. The Seoul Southern District Court issued the warrant citing concerns of evidence destruction and flight risk. Kim is facing accusations that he was involved in a stock rigging scheme during the high-profile takeover of SM Entertainment in 2023. Berkshire Hathaway has sold off another block of BYD shares, taking its stake in one of the world's biggest car makers to under 5%. That's down from more than 20% 2 years ago. Dropping below 5% means Warren Buffett's firm is no longer obligated to disclose any further sales. Buffett saw a 2,000% gain from his early bet on BYD.
Warner Brothers Discovery has offered to match Amazon's bid for US National Basketball Association TV rights. The NBA is on the verge of signing a new $76 billion 11-year deal with current broadcaster ESPN and two new partners, NBC and Amazon. The league confirmed it's reviewing Warner's proposal, which was made under a matching rights provision in its expiring contract. Delta Airlines says it expects to cancel more flights this week as it tries to recover from a crippling technology outage. The airline cancelled more than 800 flights on Monday, bringing its total since Friday's meltdown to more than 4,600. More than half of Delta's worldwide IT systems rely on Microsoft's Windows operating system, which was affected by that software error.
And Paul, we are seeing that rebound really following the gains and some of the dip buying that we saw take place in the Wall Street session there. As investors kind of focusing on the tech recovery narrative, earnings narrative as well, after quite a lot of distraction from these recent political developments. We're also seeing a bit more of a move when it comes to the so-called Harris trade basket of stocks versus the Trump trade. We are seeing some nice gains across the board there, particularly when it comes to some of these tech-heavy names across Japan and Korea. We have our exclusive interview coming up with Meta CEO and founder Mark Zuckerberg, talking about his views on AI and China with Emily Chang. That's on Bloomberg TV and Originals.
We're about 30 minutes into the trading day in Asia. Here are the top stories you should know. US Vice President Kamala Harris is consolidating support from powerful Democrats for her presidential bid. She appears to have a clear path now to the nomination, with no prominent party figure announcing a challenge. The renamed Harris for President campaign added $81 million in donations in the first 24 hours. Asian stocks are tracking a rebound on Wall Street as investors look beyond Joe Biden ending his re-election campaign to focus on tech earnings season. And Bank of Japan officials said to see weakness in consumer spending, complicating their decision next week over whether to raise interest rates. Our sources say policymakers are likely to wait until the last minute to finalise their decision after checking the latest data.
Well, US Vice President Kamala Harris became a trending topic on Chinese social media. Some users predicting her bid for the Democratic presidential nomination will return Donald Trump to the White House. Let's discuss the outlook for US-China ties and bring in Richard McGregor, who's a senior fellow for East Asia at the Lowy Institute. And it's sort of always quite amusing how much of a talking point overseas elections are on Chinese social media. But, you know, you've written about this in the sense that perhaps behind closed doors, China would prefer a Trump presidency. Is this in the sense that perhaps more kind of internal policy chaos is something that could benefit Beijing?
Yeah, well, look, I think there's a variety of views on the US election in China. You're certainly right that the ordinary netizens love it. You know, they don't get this kind of horse race in their own country. But actually, I think I lean the other way. I think that, you know, there's no one Chinese view. We certainly don't know what Xi Jinping himself thinks. But I think, on the one hand, Trump obviously is a symbol, you know, a metaphor for US decline, dilapidation, democratic decline, democratic dilapidation. But on the other hand, I think that's balanced by the fact that he's simply somebody who doesn't operate in the normal parameters of politics, either at home or abroad. He's totally unpredictable. He was very damaging for China last time, effectively changed US policy for good. You know, the Biden team has really continued it in a more professional fashion. So if you ask me on balance, does China prefer Trump? Many people will say they want him to win. I would say I would lean the opposite direction, that China would prefer that he doesn't win.
That's quite interesting, and I know that you talked about gathering views on a recent trip to Japan, and one sort of policymaker or senior official saying that they think that the Democratic Party is too intellectual. I do wonder if the possible benefit to China could be, a fracturing of the alliances that certainly the Biden administration has refocused on here in Asia.
Look, you can argue it any different way. I mean, the Japanese in this are very interesting. The Japanese generally have preferred Republicans over Democrats on foreign policy. They think the Republicans are tougher, but, Trump is a completely different Republican. But in a funny way, the Japanese, they get stereotyped as sort of reticent and opaque. But in fact, they kind of love to see the US display its power towards China. They love the US to flash its sword. And they rely on the US on China policy, the Japanese national security-wise. So in a funny way, the Japanese are a little bit positive about Trump. Now, in part, that's because in Trump's first term, the late Mr. Abe handled him so well. And I'm not quite sure they've got somebody like Mr. Abe who can do that again. But, people once again tend to assume that the Japanese would prefer Mrs. Harris, if Vice President Harris, if she's the nominee, to win. But I think it's more complicated than that. And I found many people in Japan were silently cheering for Trump or getting ready for it without too much trepidation.
Well, Japan is, of course, part of the Quad. There are other regional groupings to consider as well, like AUKUS here in Australia. What's the future of these sorts of organisations and arrangements in the next 4 years, regardless of who wins?
Well, I think the really interesting one, the big one, is the one that Haidi alluded to, which is about is Japan, South Korea, and the United States. And that's the one that I think has most upset China recently, particularly South Korea, a conservative, right-leaning president there who has been much more friendly to Japan, and the United States much more critical of China. And so those three countries, the bureaucrats in those countries are now rushing to solidify that. So even if Trump does get in, it's more difficult for him to unpick it. And I think that's the most interesting, most dynamic one. The Quad is a little bit moribund at the moment, post the Ukraine invasion by Russia and India's long-standing relations with Russia, which really have been remained pretty strong throughout this period.
We need to talk about Taiwan as well, Richard. Of course, we heard from President Trump telling Bloomberg that he'd like Taiwan to pay more for its defence. At the same time, Taiwan home to TSMC, so the US can't exactly walk away. What's the fate of Taiwan under a potential second Trump presidency?
Yeah, well, I mean, what a question to have to answer. I mean, it's the most, Trump put it in his interview with Bloomberg in the most transactional, a fashion that basically the US is like an insurance company and the premiums are, the premiums are about to go up. Once again, Trump is a little bit unpredictable. I mean, he doesn't really care about Taiwan. He makes a good point about the problems of defending Taiwan. But once again, if somebody tells Trump he looks weak, that he's been embarrassed on the world stage, then he might react in any manner of different ways. And once again, there's a vast institutional underpinning of US support and in some respects Japanese support and now engagement with Taiwan that Trump just can't come in and flick away. So it's harder for Trump once he gets into office to do that. But yeah, I mean, if you're in Taiwan, you might be a little bit worried. But then, it's a big deal for China to move on Taiwan anyway. It's not risk-free for them.
It's a big deal, but do you think that would be emboldened if Trump follows through with what he's, alluded to, which is that he doesn't really care for supporting Ukraine any further, and he, obviously a very different positioning when it comes to Gaza, but a lot of symbolism that has been attached to what happens to Ukraine, what happens with the sort of emboldenment of Vladimir Putin and how that kind of transfers to the view on Taiwan and China.
Yeah, well, Ukraine is the big one. That's the one on the front burner at the moment. And of course, if that does, fall or have to effectively under Russian control, then Russia can redeploy assets to the Pacific in support of China. But I think generally speaking, China is going to, is going to move on its own timetable. It's going to watch what's happening in Ukraine. It's going to watch what America might do if Trump were to become president again. But I think it's got a much, there's some flexibility in there, but China is still preparing its own armed forces. They've set various target dates for that. So it doesn't change on a dime post the November election.
All right, Richard McGregor, Senior Fellow for East Asia at Lowy Institute. Thanks so much for joining us. Let's take a look at some of those so-called Trump trade stocks. Seen a little bit of a reversal, a little bit of a flattening in some respects, particularly in terms of the yield curve as well. There you go. You've got the US 10-year right now, the yield just backing off a little, 424.86 at the moment. Bitcoin, which had a pretty good run-up, that's also backing off a little as well. We saw gold weaker now, although it's starting to recover some of those losses also. The US dollar, a bit of a mixed bag right now. It's stronger against some of the G10 currencies, but the dollar spot index just off by a few points. Some of the other stories that we're following: Philippine President Ferdinand Marcos Jr. outlawing online casinos which cater to Chinese gamblers. In his annual address, he banned all Philippine offshore gaming operators with immediate effect and directed managers to find new jobs for displaced employees. The sector flourished under his predecessor, Rodrigo Duterte, who steered Manila's foreign policy towards China. China's removing sanctions on US communications firm Viasat after Beijing targeted the company over proposed arms sales to Taiwan. The Chinese Foreign Ministry says it's because the situation has changed since measures were implemented. Viasat operates several subsidiaries in China, including a local branch of Inmarsat, a British satellite services provider.
Well, India's first budget under a new coalition government is expected to stick to a plan of curbing the fiscal deficit while still cutting taxes and boosting welfare spending. Finance Minister Nirmala Sitharaman is set to unveil the annual fiscal plan later on Tuesday. Bloomberg's Avril Hong has a preview for us. Avril, Prime Minister Modi giving a preview of the budget yesterday, so we've got a fair idea in terms of what to expect.
Yeah, he spoke outside Parliament just a day ago to reporters, and he said that the budget would lay out the plans of the government for the next 5 years with a focus on youth, on the poor, women, farmers as well. And perhaps this is no coincidence given how these were seen as some of the segments of the population that were the weak links for the BJP in the recent election. And the expectation from most economists that in this budget we will see a cut to taxes, a boost in spending, and this could come in the form of handouts to farmers, because the budget also comes ahead of crucial state elections, so something that could potentially boost their chances there. There's also been a lot of talk about the lack of jobs despite the relatively high growth rate, so potentially measures that could help to boost manufacturing and create jobs. Now, it's also worth noting that for the tax front, we are seeing those expectations that this could come in the form of a trim to the personal income tax to boost consumption, because even though we saw a pretty high overall growth rate in the past fiscal year for India at roughly 8%, the consumption side of things trailed at about 4%. So something that could boost spending from consumers and kind of boost the part of the population that have a higher propensity to spend. And this is coming at the time when India actually came through with a pretty conservative growth estimate for this fiscal year. It sees growth as much as 7% for this year, so something that could boost growth as well.
So lower taxes, more spending. What's that going to mean for the fiscal deficit?
Yeah, more spending, lower taxes. It does raise questions about how India is going to stick to its commitment to lowering the fiscal deficit ratio. And mind you, this is also coming at the time when Modi's two key coalition partners have also requested billions of dollars in spending. But for now, meeting some of these fiscal deficit ratio reduction targets, I think, are not seen as that big of an issue for the simple reason that the RBI is coming through also with bumper dividends. I think it's something like $25 billion, about twice what was budgeted. We also have a surge in tax revenues due to the economic expansion. So all this likely to help India to continue steadily reducing the fiscal gap, something that it's done since the peak 9.2% of GDP that we saw during the pandemic. Of course, reducing the fiscal gap, that's something that is required in order for upgrade from credit ratings. So that's something that we'll be keenly watching in the budget later today. Haidi.
April Hong there in Singapore. We do have more ahead on the Asia trade. This is Bloomberg.
A skyscraper in Hong Kong has become the poster child for China's credit bubble bust. The owners of the tower, known as The Centre, bought the property for a record $5 billion in 2017. But now they're competing with each other to secure tenants or buyers. For more, let's bring in our bond and loan reporter, Loretta Chan in Hong Kong. So, Loretta, tell us more about how The Centre became one of the most empty buildings in Central.
Yeah, that's right. Well, there's long been a saying in Hong Kong's real estate market, which is when the richest man, Li Ka-shing, is selling, you don't want to be the person on the other side buying. And that has really been the story of all these investors in the center for the past couple years. We're seeing vacancy rate at this building at a record high. It's actually twice higher than the average vacancy in Central. And we know that Hong Kong's commercial property market has already been in a downturn for the past couple years due to high interest rates and the downturn in the economy. So overall vacancy in these commercial property buildings are quite high. What's particular about the center is that it offers these divided floors for investors to buy. So during the height of the property market in the city, a lot of Chinese investors actually went in and bought single floors of the building. And we found a lot of them are Chinese developers. You know, these are companies that really rode high during China's property boom. And they got a lot of cash, they invested, and they really saw the center as a trophy investment. So a lot of them used that building as their headquarters in Hong Kong. But in the past 3 years, as the property crisis began, the government started to crack down on excessive borrowings. These companies started to run out of cash. So they started selling and dumping their investments. That's why we're seeing quite a dramatic plunge of prices. You know, they have been, some of the offer prices at the center are as much as 50% lower than when they were sold at the peak. And a lot of these owners of the center have already gone into default. Some of the most high-profile investors are, for instance, Shimao Group. It's currently facing a winding-up hearing in the Hong Kong court.
Out of the owners of the centre, how many are Chinese developers? And we know sort of some of the difficulties that they're facing at the moment.
Yeah, so among some of these owners, as I've mentioned, there was Shimao Group. We counted around 4 or 5 of them, and 80% of these Chinese owners have already defaulted on their offshore bonds. For instance, Shimao Group, they initially owned 9 floors of the building, and currently they're trying to sell some of their investments. These buildings are held through the families of the Shimao Group founders, Hui Yunmao. There was also Yuzhou Group, which is another defaulter in the building. We heard from property agents that Yuzhou has been trying to sell its floor, and it's constantly trying to cut prices on these floors. So in June, it has cut another 15% of its asking price, which was already lower than when it was initially bought by the company. Some of these companies are really facing a lot of cash issues, and we also heard that they're resorting to really expensive private credit borrowings in order to just stay afloat.
Our bond and loan reporter Loretta Chen there in Hong Kong. More ahead on the Asia trade. This is Bloomberg.
Donald Trump is obviously a big fan of Bitcoin, and the people say, you know, the Bitcoin price might goes to like 100,000 very soon. And but from the market, you know, we all see the big rallies for this asset class for the past 1 year, and we think, you know, for some of the investors, they need to have like either control the risk or take another position of the Bitcoin.
CSOP Asset Management CEO Ding Chen there, and Hong Kong will play host to a new type of Bitcoin exchange-traded fund, which allows investors to bet against the original cryptocurrency. CSOP is preparing to launch Asia's first crypto-linked inverse ETF on Tuesday. Let's bring Bloomberg Intelligence ETF analyst Rebecca Sin. So talk us about the implications and the potential of this ETF.
So as you said, Heidi, this is the first inverse Bitcoin ETF in Asia Pacific. And the impact of this is ultimately we could see this as being the largest ETF globally for inverse Bitcoin ETF. So our prediction is that CSOP could gather as much as $100 million in assets under management on their Bitcoin inverse ETF that is launching on Hong Kong Exchange today. And so the significance is, one, this is the first inverse ETF across Asia Pacific. Hong Kong is hub to many cryptocurrencies. They have now spot and futures-based Bitcoin and Ether ETF, and we could see an inverse Ether ETF coming as well. As we saw earlier right now, we just had CSOP CEO Ms. Ding Chen on, and she did an exclusive interview with us on Tiger Money podcast, where we talk about the potential of this. So ultimately, it's very significant because globally, there's only 112 million in assets under management across all inverse crypto ETPs. And so they mainly reside in the US, Switzerland, and Canada. And so this is the really first for Hong Kong and first for Asia Pacific. So we see a lot of potential. And our prediction is that cryptocurrencies, especially in Hong Kong, could become the hub of Asia Pacific. And by 2030, we could see the ETF market reach as high as $130 billion in assets under management. So there's a lot of interest from not only retail investors, but also institutional investors in the region, from Hong Kong, South Korea, Singapore, and Japan. And so there's a lot of demand for this product.
Yeah, in terms of demand, Rebecca, I mean, Bitcoin's obviously been a hugely popular product, as evidenced by the big run-up in price we've seen since it was developed. How much appetite is there for betting that it's going to fail?
So I think one of the things to note is that for a lot of these leverage and inverse product, it's not a product that you buy and hold. It's ultimately used as a tactical trade. And so it's something that you hold short term, 1 day. And in the podcast, Ms. Ding Chen says that you don't hold it for more than 10 days. And the reason for this is ultimately the compounding effect. These ETFs are futures based, so they track the futures. And so every day there's a roll cost associated with it. And the futures generally roll on a monthly basis. And so this is really a tactical trade that you would use. As you've said, Bitcoin has rallied significant all year. You know, it's at 64,000. There's talk that with the Trump presidency, they could potentially reach 100,000. And so a lot of the inverse products that you use is really tactical. You buy it in the morning and you sell it in the evening. It's if you have a short-term view on the market, you can then use the ETF. And so for this reason, a lot of the leverage and inverse ETFs generally charge more. The management fee is anywhere from 90 basis points to 2%. And so this ETF is charging 1.99%. The largest inverse Bitcoin ETF is only in the U.S. only has a fee of roughly 1.9%, and so the fees are very comparable. And so to your point, yes, the market has rallied significantly, but if you want to take the opposite view, this product now allows you to do this via shorting the Bitcoin. So the reason why you would invest into this is if you think the market's going to go down in the short term, you can then use this product. And so it gives you an easy mechanism for it.
Bloomberg Intelligence ETF analyst Rebecca Sin there. We're taking a look at a couple of stocks that are moving in really different directions, despite being, of course, related perhaps to the same story that we're tracking. We're seeing Kakao shares more broadly falling just about 1.5% off those session lows, but Kakao Bank Corporation actually up by 3.5% there. We saw that arrest warrant being issued for the Kakao founder by the South Korean court there, and some of these recent developments clearly having an impact on the price movements there. We saw Brian Kim, the founder of Kakao Group, being sort of the arrest warrant for over allegations of market manipulation. He would be the most prominent business figure in the country to wind up in jail in years if this continues to progress, Paul.
Well, let's take a look at how some of the futures around the region are trading. We've got Taiwan futures looking fairly strong at the moment. Of course, we saw a big tech-inspired risk-on rally in the US. S&P E-mini futures, though, off by about 1/10 of 1%. That's it from the Asia Trade. Markets coverage continues. This is Bloomberg.